Let us look at this question. From a lessee's perspective, a financing lease as compared to an operating lease has most likely. So from a lessee's perspective, in case of a financing lease, the present value of the lease is added on the both asset side as well as on the liabilities side. The asset side decreases through depreciation. The present value of the lease decreases through depreciation, whereas on the liability side, interest is paid on the carrying value of the lease, plus the principal amount is also repaid. So the amount of the interest that is due within 1 year increases my current liability, and hence my current assets by current liability, that is the current ratio, it decreases because my current liability is increasing. So it means higher current ratio. This option is incorrect. Let us look at the second option, the higher asset turnover ratio. Now in the asset turnover ratio, the asset part comes in the denominator. Now in case of financing lease, the present value of the lease is added on the asset side. So my net asset goes up. So if the asset goes up, then my asset turnover ratio will go down because the asset forms the denominator part of the asset turnover ratio. Hence this option is also incorrect. However, in case of financing lease, my earning before interest and taxes, that is EBIT, is greater than the earning before interest and taxes for a operating lease. This is financing lease because operating lease is an off-balance sheet activity and the entire rental payment is deducted before as a part of the operating expense. But in case of financing lease, the interest part is deducted after the operating income, that is EBIT, has been calculated. But here there is no interest as such, and hence my operating income for a financial lease is greater than the operating income for a operating lease, and hence my option C is the correct option.